some things are actually needed for you to be able to become profitable, and that is you have to be able to put this thing in place before you actually become profitable in the market. Now let's take an example. You are new into a skill. The first thing you should be going for is actually not the money, but it's actually that tool that will enable you become profitable over a long period of time. Now Forex is a game of the mind because it has to do with 99%, or will I say 97% mental game before it was technical game. But so many fools come into my DM and are like, Sammy, I heard you're into forex trading. How can I be able to become profitable in the forex market? Like, I make profit today and tomorrow I lose back what I made. How can I be able to get profitable on the long period of time? Now I want you to know something. If you are in this boat, you are not alone. It happened to me a lot of times also. So I'm going to be showing you a secret, and this has to do with the master crack on the forex trading pattern, because it's going to be showing you how you're going to become profitable consistently. I remember those days, as a beginner trader, you make money today, you make $6. Let's take for example, you open a $10 account, 10 mini size, and the market move in your favor and gives you $5. You close it and you come the next day and you open the market, you lose out $15. You lose out the $5 you made yesterday and you equally lose the one you made today. What happened then is because you don't actually know some of the things. Okay, that's some of the things that you don't know. I'm going to be showing some of the secret. So now let's look at the number one here. It's market structure. Now market structure talks about the pattern in which the market moves, the pattern and the way in which the market moves. This shows you a direction of what the market is doing. Now, take for an example, have you heard of something that they say a convoy? Let's say a governor of a state or a president is actually passing, and every other vehicle that passes behind the last vehicle that is moving is going to be getting an access way. Because why? There's not going to be any hindrance for you to move, because why? You're following a convoy. Now, Forex is like that. If you want to succeed in the market, you need to be able to identify the direction of the market. Now, when you talk about market structure, it has two phases in which market moves. One, either it is moving in the upward direction, which is the trending market, or a downward direction. Now, for the upward direction, you're talking about the bullish, where it starts giving you a higher high and higher low. Now, we're going to identify that in this market. Euro Swiss franc, that's going to be using as an example for this trade. Okay, seems like this is kind of slow. Okay, now let's just identify the market from this zone here. Now let's look at this major swing point. If you look clearly, you will see something, that this market is actually bearish. Let me take this out. Okay, this market is actually bearish from here. Okay, I think we're good with that. Okay, the market is actually bearish from this zone. Yeah, now if you want to learn how to draw a market trend line, you go to the major swing point, which is this. I made a video for it, but let me just show you something here. Okay, this is a major swing point that took the market to the downside. So we draw a trend line from there, drawing it all to the downside. So now, as you can see, these are major swing points where the market is touching these zones. It tells us that this market is actually bearish. It came to this swing zone too. Now, what I mean by this is I want to be looking for staying with the trend, which is the market structure. The structure is actually bearish. Now, from this zone, this was where the market broke out from. So what I want to be doing is I want to be staying with the market flow. The market flow is actually bearish. I think I will use this better. The market flow is actually what? Bearish. This is another bearish zone here. Market touched that zone, then there was a breakout what here. Now forget about this trend line you're seeing here. I think I don't want to make it complex. I want to make it very simple for everyone to understand. I want to make it simple for everyone to what understand. So let's take this out. Okay. Okay, let's take this out. This market actually bearish, as you can see. So this was where the market broke out from there, but this was the last major zone where the market touched, before a retracement back to the zone here, then the spike to the upside. Now, as you can see, since the market is actually bearish, what we want to be doing is looking for an opportunity to sell whenever the market comes to the trend line. Now it's very simple, guys. What I mean by staying in the flow of the market, whenever you see the major swing point, which is this, you want to wait for the market to do a retracement. Like we were told, the market moved in a zigzag format and it came back to this zone again to touch the trend line. This is where you should be getting an entry to right price or to the downside. Now when it comes down to this zone, you wait again, then you see a retracement back to the trend line again, then you look for another opportunity here to sell to the downside. Now this is how we do it. We want to stay in the flow of the market. That is where profitability is guaranteed. Now I know a lot of folks kind of like be like, guys, I think I'm going to be doing the counter trend trading. When the market gets to this zone here, you see some folks to be like, I think I should buy, and you want to buy to the upside. What you're doing is you're doing the counter trend trading, because why? The trend is actually bearish and you're trading against the trend. And now profitability is not highly percent profitable. I know you'll be looking at my chart and you'll be like, guy, yeah, I can see the market retracing back there. No, it's cool, but you have to master discipline. You have to master discipline in the sense that you want to stay with the flow of the market. That is where profitability. If the market flow is bearish, let's all look for opportunity to go down to downside and what trade. That way we have a higher chances of what trading. Now that's one of it. And the next one is another way you can highly pinpoint your entry and stay profitable in the market is when you're able to what master your trading discipline. Now your trading plan. Now let's start from a trading plan. Now trading plan, what is trading plan? Trading plan talks about how you want to be able to look at your chart. Since you know our direction is bearish and we want to look for entries to go down, now we're going to be looking for a trading plan. Now this is a different trading plan from what I taught my students. It's actually a little bit advanced. I'm going to be making a separate video for it in the future, but I just want to give a tips about how this trading plan does. Now let's give an example of this trading plan. Let's take for an example, I have $100 account. Let me shift this stuff first. Let me shift this stuff so there will be space for us to do some little bit calculation so we can get and understand what the trading plan is. I think this trading plan I have heard about it somewhere before I was introduced to it. Kind of heard about it before I was introduced to it. Okay, now let's use the space here. Let's say we have a $100 account. $100 account. Now $100 account. Now let's say we divide this thing $100 by divided by sorry we divide it by 10. Now if we divide it by 10, we'll see that we have 10 opportunities to trade. The answer will be 10, because why? We have 10 opportunity to trade. Now what we're going to be doing now is say how many times do I need to trade to blow up this $100 account? I need 10 trade. Now let me quickly say this before concluding continuing this trading plan strategy. Please, if you haven't mastered this market structure trading direction, please don't use this strategy. It's going to be very dangerous for you, because this strategy is actually for traders that have mastered their trading strategy. Like I said, the trading plan is actually what advanced, but I'll be dropping a video subsequently in the future to explain it better. I'm not giving the tips on this video. So let's say I need 10 trade to play out. In order to, I need to make 10 losses to blow up this account. And there's no way you can master your strategy and blow up your account 10 times. No, it's not possible. Now, let's say this is it. I need 10 times. Now, let's move forward. Let's say how many times, let's say I have a 1 to 3 risk reward ratio, a 1 to a 3 risk reward ratio. Now, in this 1 to 3 risk reward ratio, it simply means that if I risk $10, I should be expecting $30 in a trade. Then if I lose $10 in a trade, I'm cool with it. Now let's take for an example, I make out my trade at the end of the month. I took 10 trade, and actually in the 10 trade I made in the 6th trade rather, 6 played out. 6 trade, let me clean this stuff. 6 of my trade played out, and there was some 4 losses. I lost 4 of my trade. Now 4 of my trade is equivalent to $40, and 6 of my trade, since it's 1 to 3, I'll be having 180. Sorry, I don't know what this stuff is doing. Whatever this is. Okay, let's just say that's just 180. I don't know what stuff is doing. 180, and at the long run, if we minus this 40 from here, we'll be having 140. $140 plus my $100 that was there, that becomes $240 plus my $100. Don't forget, I was risking $100. So if you add these two up, you'll be having equivalent to, let me take this out, or we're having $240. That means I was able to double up my account. I was able to double up my account at the end of the month. Now this is a strategy that is cool. It keeps you profitable, and I'm going to be explaining it in the video, like I said, in the future video, like I said. Now the next one you want to be doing is having a trading rule. Now what is trading rule? In trading rule, I actually mistake it for it on my trading plan. I was thinking trading rules and trading plans were the same as a beginner, but they are different. They are different because trading rule is actually different from trading plan. Trading rule talks about when you want to enter the market. Now, one of my rule is I'm a New York section trader. I'm not a London section trader. Why? Because I told myself that I love the volatility on New York, because volatility on New York is actually cool. I can trade up from 2 p.m. watt down to 6 p.m. watt Nigeria time. It's cool with me because why? I'm able to have other things doing in the morning. I feel doing my activities in the morning, then coming to trade in the afternoon. Other traders might be convenient with you for London section because you want to be busy in the afternoon, whatever time you are. Cool with. That's one of the trading plan. Another of my trading plan is I want to be risking 2% of my trading capital on a trade. It all depends on my strategy. It all depends on what I said. I was doing that off before I came up with this trading plan that said, okay, I'm going to be changing it to a 10% in a trade. Yeah, cool with it, because why? We develop over time. That 2% was not working for me over time, but this 10% is gives me high probability what trading what set up for me to put up this trade up and what go profitable. Now the next one is risk management. Risk management is cool if you understand what the market is doing for you to risk. Now let me take for an example. You are risking a certain amount of dollars in a trade, and you find out that the market is not moving, or there's going to be, or you're not sure. Now what some pro traders do is they're going to be cutting their losses short. Let's take for an example, you are having a trade and you open a $100 account. $100, okay, you're opening a $100 account, not an account, $100 entry, sorry. $100 entry, and the market is moving against you. So since you're not sure of it, you're going to be closing out 50%. Let's take 50%. You close out 50% loss, and let's say your stop loss is 30 pips. Now if you close out 50% loss and the market eventually move against you and go down to hit 50 and the 30%, you'll be losing out 150 in that trade plus the $50 you closed. That becomes equivalent to 200. But whereas if you refuse to close out the trade that was losing $100 account and it moved down against you, $100 account, and it moved down against you, that will be 300. It all depends on what you're closing. So the loss increased because why? You did not what manage your risk effectively. Why? The trade was what? Not moving in your favor. You were not sure about the trade. Yeah. Another one is because of greed, we place a trade that affects us. We need to be able to manage our risk. Now, trading, like I said from the beginning of this video, is 100% probability. Is a probability game, not 100% probability. We are not sure about it. We just risk based on what we understand the market is what doing. Okay, so we want to stay what profitable by managing our risk. Now, let me quickly say this: the level of risk you can manage will determine how long you stay in a game. Let's say, for an example, if you are not managing your risk effectively, you're going to be closing out your trade. You're going to be wiping out your entire capital. You don't want to allow some trade to wipe up your account because why? You are greedy after the money. Yeah, you're greedy after the money. Now, the next one is self mastery. Now, this is where the problem is. Yeah, this is where the problem is. It's actually a problem to all traders. All traders. Now, let me take for an example. Or let me just quickly explain something. Trading is not going to be working for you just like that. It's going to checkmate you. It's going to be making you understand who you really are for yourself first before what playing out in your favor. Now, what do I mean by that? What I simply mean is this. Um, if you are a kind of person that quickly get angry, you have to be able to identify what triggers those anger before you enter into the forex market. Now, let me take for an example. If you are a kind of person that are into a business and you hate losses, good. You understand your kind of person. This is what you should be doing. Whenever you get into the market, tell yourself how much you want to lose first before placing a trade. So in case anything goes wrong, you are not blaming yourself or you're not getting angry with the market for no reason. Because why? You have already told yourself what you want to lose before getting involved in the trade. Now the next one is greed. If the market actually moves in your favor, let's say you are making about some certain number of pips and you don't want to close the trade because you want the market to go and hit your favor. Sometimes you move your stop, your take profit even higher than where you were placed it or lower than where you placed it, because why? You want to make so much money in one day. That is greed, and I can guarantee you that the market will reverse and come stop you at, because why? As at that time what is playing out is your emotion. We don't use emotion to trade. Now, one of my students chatted me up and he was like, Sammy, how do I manage my emotions? How do I take away my emotions? We don't take our emotions away completely. We only learn to manage them and identify when they come up in play. Now, what I mean by that is this. Yesterday, I was actually traveling and I was stressed because I was moving out from one bus to another. I was moving from one bus to another. I actually wanted to trade during the course of the journey to just while away time and get busy. The market moved in my favor and I was seeing some number of dollars. I wanted to close the trade, but I was like, the journey is still long. Let us keep moving. Let's just keep moving. Something happened. The market reversed and stopped me out. Now, why did that happen? After I was done and I got to the house and I decided to do a review, I
decided to understand something, that while I was trading, I was actually under stress. Because initially, if I was on my own, like my trading desk on the road, on my trading room, I wouldn't have done that. Because why? I wouldn't have risked what I did. I would have just closed away that partials and would allow the trade to run. But what happened was I was stopped out and I was angry. Why was I angry? Because my emotions as at that time while I was under stress was because I was the environment for my, how will I put it, one of my trading plan. Okay, let me just say I broke my trading plan. Yeah, one of my trading plans, or should I say trading rules, is that I'm not going to be trading whenever I'm not psychologically fit. And as at that time I was under stress, that was the wrong time for me to be trading. Trading under stress doesn't come out well with me, and I understand that. I just had to like force myself because I wanted to like while away time, and that was the wrong environment for me to while away time. Yeah, that's the truth. Now I understand that. I know where the problem is coming from. I know where the problem is coming from. But for a beginner trader, the trader will be like, ah, this market stopped me out. Tomorrow I'm going to be revenge trading. I'm going to be doing this to get my money back and all of that. That is wrong. The next one is revenge trading. Now, revenge trading is actually you placing another trade after your trade was stopped out, or you going to the market again because you want to make so much money from what you lost yesterday. That is wrong. You'll be losing more money because why? You are trading off of your emotion. Try your possible best and identify when you're angry, when you're greedy, and understand when these things come in play and try and manage them as possible. If you're angry or someone got you angry, it's not the right time to trade. If you are having a greed because you are having a pressure, you're owing someone money, so you decided to place a trade, a high trade, so you can be able to make so much money to clear up your debt, that is the wrong time to trade. You will be under pressure, and being under pressure is going to make you lose more money. Okay, I think that's all for this video, so I'll see you in the next video. And I have a question, please let me know, what is your biggest fear in the market? Like, what's your biggest fear in the market? Let's talk about it on the comment section. Leave it there.